Hey traders, checking in on the stock market today. So in previous days, we've had clear trending days with one side keeping full control for most of the day. And today was a little back and forth, but the bigger picture helped us shape the most likely scenario, and I will show you how I established that mindset. So before we get to the regular chart rundown here, I'll just go over how I approached the trading day today. And definitely been a tricky swing trading environment when we have significantly strong closes, lower opens, weak closes with higher opens. So day trading has been the way to go for me personally, just to stay on top of things. And the swing positions that I do have are just doing this, where, break even on the month and it's a nice big day and then it's down a bunch. So I do have some bull positions that I have established for the potential of a bull break into a bigger picture bounce here. But on a daily basis, I'm entering bearish positions to offset when the bears keep control or attempt to offset. So I headed into today seeing, okay, we gave back most of yesterday's move overnight. And the cryptocurrency space did so as well. Bitcoin had a 10% bull breakout and then gave it all back and was at the low of the previous day this morning. And both SPY and QQQ were testing the low of yesterday first thing this morning. And we had a bearish reaction to CPI numbers and we broke lows of yesterday. So the bears controlled the morning, but bigger picture, I was keeping an eye out for the bulls to show up today. And the reason I was doing that was the futures chart. Again, I'm always cycling around to find what is the most clear time frame for me. Sometimes it's on QQQ and SPY, sometimes it's on the futures charts. And so this time it was on the futures chart and the 4-hour time frame perspective. And I'm looking at this and I'm seeing it's a stair-step pattern where we had a significant move up off the low, higher low every single candle, and that pattern broke with an inside bar bear break overnight. And then the bears took control from there. So for me, what is the most likely scenario? There are only a couple scenarios that take place. We either drop, two scenarios. We either drop straight to the lower low or we form a higher low. And because of how much space the bulls had to work with, for me, I'm scouting a higher low there. So I know it's the 4-hour time frame and I know it doesn't have to happen today, but I'm watching for it. So what's the indication that a 4-hour higher low is set? And I'm taking this from the crypto space because I never used 4-hour time frames when I was trading stocks. And in cryptocurrency being 24 hours a day, the 4-hour time frame breaks things up nicely, 6 candles in the day, nice and even. And so it's a 15-minute trend change to the bulls to indicate a 4-hour higher low is shaping up. So as we're heading into, or midday at that point, we're fairly weak. And the bears are in complete control. There's no doubt about that. We dropped to the low of the day, 5-minute bear flag confirmed, 5-minute bear flag confirmed. So at 11:54, which puts us right about, so the bounce was already underway. And I say, with the NASDAQ and S&P 500 futures, the 4-hour charts as my midterm guide, I know a 15-minute trend change is needed on SPY and QQQ to try and shape up the 4-hour higher lows. I'm looking for a 15-minute lower high to be the result of this current bounce. So the current bounce that we were in, I'm knowing that we're likely to just form a 15-minute lower high. Why is that the most likely scenario? Because if it's not, we just V-shape to a new high of the day. That's the less likely scenario, unless big-time bull volume shows up out of nowhere. So in the absence of big-time bull volume, we scout the 15-minute lower high. So freeze here. At this point, I've used a longer term time frame to determine what I feel is the most likely scenario. And now I'm zoomed in to look for the details on the shorter term time frame to confirm or reject what my thesis is. And so we got a big enough 15-minute bounce. I can use the retracement here. The 15-minute bounce made it to 50% retracement plus. If it were 382 or less, it would favor another leg down, and I would not be confident that our 4-hour higher low is being set. But when you bounce 50%, I can say, okay, bulls are shaping up a trend change attempt. They're going to try to set a 15-minute higher low next time we consolidate. We then confirm the 15-minute trend change. That is the first indication the 4-hour higher low is being set. When the bulls then broke the high of the day from there, it became official, our 4-hour higher low is set. So I can look at the retracement size here as a gauge for probabilities as well. Okay, we pulled back right about to the golden pocket, 618 retracement or so. So from here, I am looking for 2 scenarios. Well, there's how many scenarios? 3 scenarios that can play out. We can either set a lower high an equilibrium into tomorrow, and then tomorrow will dictate, or maybe even Monday, it all depends, but equilibrium or a bull break or a failure to break the high and a confirmation of a 4-hour downtrend. Those are the only 3 things that can happen. And one of those 3 things will happen. So now we watch our clues to determine which is most likely. From there, anything under the high of the day, so we hadn't broken the high of the day yet, anything under there is an hourly lower high. The bulls are hoping to break that level before hourly consolidation begins. We have not changed the hourly trend yet. I'm keeping that in the back of my mind. Great, 4-hour high or low is set, but I know we're not going anywhere as far as any follow through off this 4-hour high or low unless we change hourly trends. And let's just look at the NASDAQ to stay on theme here. Is this an hourly trend change, this little higher low? Not convincingly for me. If that 4-hour higher low is going to be confident, I need another higher low and continuation of that bounce. So we can even zoom in here and look at this retracement size now to help us determine probabilities. Where, okay, we topped out, we found the higher low, we've already bounced 50%. So it's possible an equilibrium is shaping up here. And we're going to get a lot more information tomorrow, and I'm excited. So S&P 500, how does it compare on its futures chart? It's pretty much the same. 4-hour higher low set. We're either going to follow through. It's also the 12-hour. If you want to be on the 12-hour, it's trying for a 12-hour higher low. But I like the 4-hour for clarity. We're either going to break resistance and shift this momentum as far as keeping the daily bounce going, or our daily lower high is going to very quickly be set. Some names that were weaker already set daily lower highs. But 4-hour futures chart has the clarity for me into tomorrow. Amazon, we had that bull news overnight. So seeing where we stand, we know we're still in a daily downtrend. Anything under 30.89, just a lower high. So it's still up to the bulls. Have to confirm a trend change if they're going to prove it to us. But this was one of the weakest major tech names, and now they have a cushion and some space to work with. So I definitely take that into account when I'm looking at the S&P 500 and the NASDAQ futures. But to offset that a bit, Apple had a big red day. So Amazon with a big green day, and Apple dropped fairly hard and dropped down to the low of the week. It held, but we set a daily lower high on Apple. So the daily lower highs have just been set now, 176.65, another one, and now our recent one, 163.41. Have to break the lower highs if bulls are going to prove anything in the short term. The burden's still on the bulls. We can say that much, but we can see how it's potentially shaping up for them to make an attempt. SMH, trying for the daily high or low. So the daily lower high is already set. We bounced and then pulled back a significant amount. So 258.70 is now resistance. If the bulls are going to shift some momentum, we must break that level for the little higher low and higher high. And again, this was the falling wedge from yesterday's video that we're going to keep an eye on. And NIO is a falling wedge. We'll talk about that in just a moment. Tesla is nice and tight. We know volatility is coming to Tesla. How can we say that? Because we are trading in a tightening range. Wide range, higher low, and lower high with this little double top at resistance, and now trying for another higher low. So I can say that we are likely to see a volume and volatility spike in Tesla sometime within the next 4 trading days. As far as the direction, the burden is on the bulls. The bears are very comfortable because every single bounce has just been a lower high. That being said, I have a bull bias on Tesla, and it's important to recognize our biases because otherwise they get us in trouble and make us lose money. So every day I'm approaching Tesla with a bull mindset. Why? Solar sector doing really well. Pretty much my thesis from the Monday video. I'm watching solar and Tesla, an EV, but Tesla's my EV watch. And we're watching for money to flow there. It flowed into the solar sector very clearly. Tesla is holding up better. Its retracement on this daily consolidation is much healthier than QQQ and the tech sector. But it still has to prove it for the bulls. So they have not proven it yet, but the setup is there. I see them shaping it up. Whether they execute, and follow through, we have to wait and see. But I have a bull lean on Tesla. That bull lean will evaporate if 782 breaks. That has to hold because, again, we need that higher low and then the break of these resistance levels. So I have a little bit of a swing position initiated, but I'm trading with smaller position sizes in this current volatile environment. And again, it has to do with my mindset. Do I want to be an aggressive trader? Am I trying to make my year in this month? Or am I taking a bit of a step back and slowing down position size a little bit and just trying to go steady as she goes with base hits. And for me, it's option number 2. And there's a lot of factors with that. Maybe your outside life is a bit distracting or things like that. I know for me personally, work with the chart guys increases when there's fear and volatility. I just have to answer more questions. There's more messages. There's more work to do. So for me, that means dial it back a little bit. But long story short, I'm interested in Tesla bullish, and we need a break of 860.56 and 866.14. We have to ensure that the NASDAQ is following bullish as well, but I am watching Tesla very closely. We need an hourly trend change to the bulls. It was a nice big bounce off the low of the day, but we have not confirmed an hourly trend change to the bulls yet. So another one that I'm excited to watch play out. We'll see how it goes. NIO, still watching that falling wedge. We're right at support. Chinese names are getting crushed. And again, for me personally, we have the Chinese names are starting to see whatever restrictions are being placed on them go into effect. But for me, it's just if the market is struggling to have confidence in SPY and Apple and these lead bulls, these strong names, there's just so much headline risk on Chinese names with the current geopolitical environment that if you don't have confidence in the broader market, how are you going to have confidence in these Chinese names? For me, it's always the broader market finds a bottom and gains confidence, and then that confidence seeps out. And we look for the laggard sectors that were higher risk and maybe higher reward because of that higher risk. But I need to see confidence in the broader market first before I start looking to places like the cannabis sector or the crushed Chinese names. Solar sector. Daily bull flag attempt, anything above 66.78 is a daily high or low. It was an inside bar bear break, but little bear follow through. I was watching for hourly oversold conditions. We came fairly close, but didn't quite get there. Looks like this is after hours. Is this a legitimate print or not? Volume suggests probably not. Let's zoom in. Can always go to the 15-second time frame. Nah, not a legit print. Probably shares settling from earlier in the day. There would need to be way more volume if that were legitimate. But we need an hourly trend change back to the bulls for a daily high or low to be shaping up. We saw the RSI drop down into the 30s, but it didn't get oversold. So keeping an eye out for an hourly trend change to try and shape up back to the bulls to set a daily high or low. The healthcare sector, still trying to hang on. Again, new line in the sand support. Bulls must hold 127.47 and break 132.64 to shift this momentum. Those are the 2 levels. We have a short-term resistance here as well. If you're really focusing, you're watching that. But these are the levels that matter to me because I don't pay a whole bunch of attention to the healthcare sector because I don't trade many names that correlate with it. But I know it's important to the broader market to a certain degree. Financial sector. Can the bulls hold the low and break the daily lower high pattern? To do so, we need to get over 37.28. Keeping in mind that if we do break that level, all that means is we zoom out and scout a weekly lower high. But that's what the bulls are attempting to do here because every single bounce has been a lower high over the last month. And if that doesn't change, the bears keep complete control. Biotech sector, daily inside bar. So again, it's getting nice and tight. The bulls are shaping up. It's clear. It's right there for the taking. The question is, can the bulls take it? Can they show up with the volume to break resistance and put some pressure on short-term bears? Because if you break 91.36, anybody that has been short the biotech sector in the last 2 weeks of trading, more than that, 2.5 weeks, is now underwater. So that's starting to try and shift the scales a little bit. But we haven't done anything yet unless we break 91.36. So we have a double bottom at support, and we must break the daily lower high resistances. Nah, don't really like those trend lines. Let's stick with the price levels. The dollar, daily high or low, trying to form here. 4-hour time frame. Have not changed the trend back to the bulls yet, so we need to see that. Looks like the volatile reaction to CPI numbers this morning. And again, if we're going to see weakness here, we have to fail the high of 99.42 and then break where we just came from. Lose the daily EMA 12, lose the daily higher lows, and form a big bear reversal candle on the weekly time frame. And again, I have more confidence in a broader market bounce with a weak dollar. And because of the recent inverse correlations with weak metals, with weak oil. So we have to see that take shape to help us gain confidence as a couple pieces of the puzzle for a broader market bounce. And gold, we are scouting a 4-hour lower high. We have not changed the 4-hour trend at this point. You could call this a head and shoulders potential pattern. We would need to drop down and break 1970 to confirm it, and that would have us look for more significant daily consolidation. At this point, the consolidation is still healthy. The daily EMA12 is support, the daily uptrend is intact. So again, because of the inverse relationship, a broader market bull wants to see weakness in the metals, and we don't have weakness at this point. We definitely need another leg down. Silver in comparison, same thing as far as the head and shoulders. If we top out with a 4-hour lower high, it's possible that we drop down and break these levels. So that is what a bear is hoping for. We're probably back testing my uptrend resistance line previously. We are. So we're back testing that previous support, now resistance. Burden on bears. Daily still very healthy with EMA 12. We have to confirm that 4-hour downtrend for metal bears to see anything. Otherwise, the dailies remain healthy. Miners, big bounce. Daily higher low already set. First hourly oversold conditions marked the daily higher low. Again, this is my bread and butter in the crypto space when it's going nuts. Nice to see it work for the miners as well. Anything under 40.26 is just a daily lower high. The hourly uptrend is our guide. And we would need to see the bears pretty much break the low of today, tomorrow, if we were going to set a daily lower high. And we can be watching for that. This is the 4-hour time frame, and it's a very wide range. Anything under 40.26 is a 4-hour lower high. And oil, still weak. Oil's testing the lows here. 4-hour lower high set and heading down towards support. Bears would love to break 103.63 to confirm the downtrend and to confirm further consolidation, because if we see another leg down under 103.63 from here, the probabilities that a daily lower high will be the result of the next bounce will increase fairly significantly. And CCJ swing position from yesterday. Start of the morning, great. The key resistance, 28.49, so we know that's the battleground. And the bulls started real strong. And I made a bounce attempt play on the waterfall drop, played off the low with some wiggle room, and ended up stopping out. We did get a little bit of a bounce, but that was my aggressive position because I got my swing position that I am still holding because we were green today. But I was going to add to that swing position. If we could form a little higher low here and get a bounce going, I would have then had a real nice position, but gave back a small amount of profit to make that attempt and just a tight stop out. Some other trades that I took today. So I have long exposure in my stock portfolios, a little bit have long exposure, and in the crypto space as well. I do have some SQQQ again, but I went in aggressive into the end of the day watching. Let's go to QQQ. Watching, knowing that we haven't changed the hourly trend yet convincingly, and watching for the potential that hourly consolidation was going to take shape into the end of the day. So I was watching this rising wedge, and I had it drawn a little bit differently, but in the interest of time here, it was something along these lines, and I did make a bearish entry on the loss of this 2-minute uptrend. And that was just looking to protect my open bullish positions. If hourly consolidation takes place, my open bullish positions are going to be hurt by that. And so I would profit with my SQQQ position. And then once we got bear follow through, I just set my stop at break even. If we break resistance and it stops me out, that means hourly consolidation is not underway. It means my bullish positions are likely going up. And if I can just stop out break even on my protection, that's ideal because my bullish positions are worth more and I stop out break even and don't get that loss. I do that very often. And again, that's where I'm trying to have a couple swing positions open, but I try and protect them with day trade SQQQ positions as well. One other trade I took today wasn't a full-on trading day for me. I was gone most of the day, but 1 minute oversold climax on NIO, this volume climax. And I was fortunate enough to be away from the computer because if I were watching it the whole morning, I probably would have made an attempt to play the bounce earlier that would have failed. But when you give me this 1 minute waterfall and you give me a volume climax, I'm in terms of scaling in for a bounce. And again, we were oversold on a bunch of time frames. Hourly was only just getting oversold, but 30 minute, 15 minute, 5 minute, 2 minute, 1 minute, shorter term time frames crushed and got a great fill at 17.26, scaled out fairly quickly. But that was just a little trade. And that was about it for me today. Couple little wins, couple little losses, a little break even mixed in there. Overall, not very eventful, but I'm watching very closely Tesla to see if bulls can prove it. Watching everywhere. Can bulls prove a daily bounce shaping up, or are we heading down for another leg? Another leg down. I hope you're well. Do good things. Thanks for watching. See you soon.
So here we have a plum tree, and this plum tree has played the oversold bounce on temperature too soon and too aggressively. So we've been in a downtrend in temperature all throughout the winter. Big oversold bounce recently, 70-degree days, but we're about to drop to lower lows overnight this weekend to 15 degrees. So all this energy, all this capital that this tree has put into these flowers, it's going to hit its stop loss and they're all going to die. And we're not going to get any fruit on these flowers because it was too soon. That's why fruit farmers have to do a whole bunch of hedging, because if you have a frost that is late in the season, you can have no fruit, you can blow up your account and liquidate everything. These are tulips. They've put in some entry into playing the oversold bounce. They're scaling in slowly, but they are preserving their capital, their energy, by not putting out their flowers yet. They're waiting for a trend change to confirm on temperature to ensure that they don't get stopped out.